Yeah, I'm very happy to have a fantastic panel of GPs and VCs here today to discuss what has become more and more front and center of both investors and companies' mind frame, which is the general conversation around tech for good, ESG, impact, sustainability, responsible investing, ethical investing. Basically, there's no frontier of what the names are, and that will be one of the questions we're discussing today. We'll start with LP conversations, GP concerns, going down to the company level, and really try to get to the bottom of where we at with all of this. What does it all mean, and what are we going to look at going forward? But before we're diving into the areas, I'd love everyone on the panel to introduce themselves quickly. Hannah, do you want to go first?
Hi everyone, I'm Hannah. I'm a partner at a new London-based venture firm called Houghton Ventures. We're in partnership with the London School of Economics, backing companies founded by students and alumni of the university globally. But perhaps more relevant for this conversation, I'm part of a team that's set up an initiative around ESG and venture called Venture ESG.
Liz, you want to go next?
Hey everyone, I'm Liz Broderick from Kindred Capital. We're a sector agnostic, sector agnostic early stage venture fund, mostly investing in kind of UK and European founders. My role is to support our portfolio companies post-investment, so really anything they need to grow, and that includes a lot of our kind of ESG work. So we're not an impact fund, but have some impact companies in the portfolio and care deeply about helping to build, responsible early stage businesses.
Yeah, thank you so much. Tom and Nigel, you want to finish?
Hello, so Tom Bradley from Hambro Perks. I'm a partner with Hambro Perks and I've been in technology investments for about 20 years now. Hambro Perks is a 7-year-old fast-growing venture capital business, actually backing private technology and healthcare companies at a variety of stages. We have about 95 companies in the portfolio now. And of relevance to this, I lead internal initiatives on ESG, and I also help to manage a portfolio of environmental technology businesses that we acquired about 6 months ago.
Hi everyone, Nigel McCleave. I'm a principal at Lightrock. We're a global growth equity investor with offices in London, Sao Paulo, Bangalore, and Nairobi. Today we're about 55 people, deployed about $1 billion into late stage venture and growth equity businesses globally. I personally look after European investments. Most relevantly for this panel, we do identify as an impact investor, meaning that fundamentally, firstly, we invest thematically in areas where there are big global challenges to be solved. And secondly, we try to help our companies think through areas related to sustainability, ESG, impact, and ethics, where there is a strong alignment with the long-term success of the business.
Yeah, thanks so much, everyone, for the intros. So just for everyone watching, we'll kick off a conversation touching on various different subject areas that we hope are of interest to you as well. But please feel free to, at any one point, put questions into the chat. They'll be fed to us, and we make sure to answer as many of them as possible. And we'll definitely have some dedicated time at the end for a more straightforward Q&A. But to dive right in, so as the panel title suggests to begin with, and as you've already picked up possibly from the conversations and the intros now, there's various different words and concepts and lots of different bits and pieces of frameworks and standards that stand behind this whole world of tech for good, impact, sustainability, ESG. Hannah, do you want to give us a quick idea of what is what, particularly picking out two of the ones that are most used, particularly in the tech space, ESG versus / together with impact?
Yeah, so I think ESG and impact are the two terms that get used most frequently, and I think there's currently probably, for people who aren't as engaged in the discussion, quite a lot of confusion around what means what about someone's investment activities. So the way that we have framed it is that impact is all around the external outcomes that a company is creating through its product or service. And ESG relates to all of the internal operations, so whether that be processes or policies that a company is adhering to. So on that basis, any company, regardless of whether they're trying to create impact or not, can be ESG aligned and should be ESG aligned, whereas not every company is going to be an impact-oriented company. And on that basis, we believe that the two aren't mutually exclusive, that they should run in parallel.
So where would the SDGs fit in there? Because that's something that a lot of people will have some kind of an idea of. Is that relevant for ESG, or is it impact, or is it kind of somewhere in the middle there?
I think probably Nigel would be well placed to answer this, but in our perspective, SDGs would fit into impact. So they would be looking at the specific outcomes that you're driving on each of those SDGs.
And Nigel, you mentioned that you would self-define as an impact investor, and you care about all of the above, from impact to ESG to ethics. What would you say is making you an impact investor in particular? Like on a day-to-day basis and in a kind of mission that you're following, what do you care about that makes you different from, quote unquote, a commercial fund, so to speak, or is there no difference?
So a multifaceted question. I think it's quite interesting to explore various parts of it. I think ultimately our ambitions are no different to a commercial funds in terms of wanting to generate commercial value, right? So I think that is probably the thing that has changed most in the understanding of the market over the past few years, is that previously impact was always seen as a burden to commercial value generation. And our belief is that actually not only is that not the case, but in some cases it's completely the opposite. So when it comes to attracting talent, when it comes to raising capital, we're seeing businesses that are actually more impactful, have the potential to create commercial alpha as well as kind of social and environmental alpha. I think just on the ESG and impact point, I completely agree with Hannah. We view ESG as the bare minimum, right? And I think on the point of the SDGs, one way to look at it is to use an analogy. So if you take Exxon, right? Exxon is a company that you could have an ESG thesis and invest in, right? Because it's about minimizing the harm it's doing, making sure it's paying its employees properly, making sure it's not polluting unnecessarily versus its business model, having the appropriate governance policies in place. So you could form an ESG narrative around that. But from an impact perspective, which fundamentally looks to back businesses that are contributing to either an environmental or social objective, you start to see how that narrative doesn't quite make as much sense. I'll pause there.
Absolutely, I fully agreed. And there's developments that are particularly at the moment focused at the public equity side of things that are trying to make this directly part of the financial accounting frameworks, right? George Serafim at Harvard is devising something that he calls impact-weighted accounts, where exactly what you said, this idea that impact usually means less financial return, actually is suddenly part of your financial calculations. And you can see immediately what you just laid out. Exxon will actually have negative impacts on their financial bottom line because they're polluting the environment, right? Well, obviously, we're a little bit away from that becoming a standard. I wanted to briefly think about what is it that, having started this research, looking at VCs and impact about 18 months ago, and the first piece I ever wrote was really asking, why does nobody care? I was literally making the rounds of VCs, both in the US and here, and asked them about tech for good and impact. I didn't really know too much about ESG back then. And they were like, yeah, that's not really on our agenda. Why is this now becoming a much, much bigger conversation? And what are the motivations for people to engage in any of this? Perhaps Tom and then Liz to answer this.
Yeah, another great question, I think, Johannes. So I think the first and most simple answer is because it's the right thing to do. And that sounds straightforward, but undeniably is true. If we weren't talking about COVID, we'd be talking about climate and the environment. We'd be talking about issues of social equality. I mean, these were before everything was COVID. We were talking about climate. We were talking about Extinction Rebellion. We were talking about Black Lives Matter and all of these things. So it's at the forefront of the narrative, and it is the right thing to do. So that's the first thing that I would say. I think secondarily, I think also it is a natural fit with the VC space. I mean, I think part of our role in venture capital is to look beyond the horizon, to use capital to try to to solve problems which perhaps are beyond the horizon or beyond the timeframes or innovation capability of established businesses. So in many ways, I think and I'm talking here about impact in Hannah's definition rather than being good against an ESG scorecard. Solving impactful problems is something that VC and venture capital should do really, really well, and I firmly believe that. I think the third thing that I would say is that there's been, I think, a mindset shift over the last year or so. Partly driven by the the news agenda and the prominence and the sort of repeated prominence of the the phrase. I mean, ESG appears everywhere. Impact appears very frequently, sort of in advertising and marketing and literature, in the currency of debate. But I think that and Nigel alluded to this, that the impact, I think, is no longer sort of seen as a sector in itself. It's not like you invest in commercial things or you invest in impactful things. It's now, I think, seen as a lens or an overlay which can be applied to investments across the board. And I think that idea that either your North Star is a financial metric or an impact metric is being left behind. That actually you can have North Star metrics which are both impactful and an investment strategy which is designed to maximize financial return. And again, I'm parroting Nigel, but I agree with an enormous amount of what he said there, which is that we find that as a group of investors, and so the people that the talented people that we back, they gravitate towards big problems, they gravitate towards long-term problems, and they gravitate towards say these challenges which motivate. And we increasingly, I think the sector sees an alignment between solving big problems, big financial impact, and indeed substantial social impact, environmental impact, or however you measure it. So yeah, I think that's the change we've seen in the last year or so, which has really catalyzed this.
Has that come with a change of LP attitudes? Because the structure of the VC ecosystem isn't exactly set up to necessarily look beyond financial returns, right? What I hear from VCs in the US in particular a lot is, bottom line is only fiduciary duty, i.e. financial return maximization. Impact might dilute my focus on that, so can't engage.
Yeah, I think again, it's a really good question. I'm sure we'll have several LPs who are listening in here, and it would be great to have them feed their perspectives in as well. But I think that's certainly an element of it. I think US and Europe, I think, are different. And Hannah, you should speak on this point as well, because I know you have thoughts on this. But I think actually in many ways, Europe is substantially further ahead. If you look at sort of funds flows into listed funds in the space, Europe is leading the way, and in terms of setting the standard. And just if I speak from my own experience, I mean, the fund that we've been raising recently, we engage with a number of LPs for whom this is high on the agenda. So our anchor LP in our new fund, for them, these issues of impact, particularly framed as sort of rebuilding sort of post COVID, but certainly the impact stories, the ESG performance of the portfolio has been important to them. Candidly, we've met others, so large investors who have said, actually, we're going to ask you some questions about ESG. We're not quite sure what we're going to do with that data yet, but we're starting to collect the data and sort of starting to understand. So I think we're in my experience, in our experience, we're seeing an emerging interest in the space. But I think just given the direction of travel in public markets and in the broader debate, I think it feels kind of inevitable to me that this will be central.
Liz, do you have more thoughts on this question around why now and what's particularly front of mind for people in the VC space?
Yeah, absolutely. I mean, I very much agree with what Tom and earlier what Nigel was saying about kind of there's much better understanding about the trade-off or lack thereof of impact and financial returns. And as I mentioned, Kindred is not an impact fund, but fundamentally believe that that's where a lot of the largest opportunities are in kind of the healthcare, education, social space. So a lot of our fund ends up investing in those companies. And I think, our team are bought into that, our LPs are bought into that. And it's a little early for us to be able to tell, but we'll hope to be able to show you in kind of 5+ years as those companies grow. But I think the additional piece that I'd like to acknowledge is the ESG piece, which is kind of helping manage how our companies are growing and running themselves. And I think there is more data than ever to show like a lot of these kind of actions around talent and team and responsible product design and supply chain. If these companies can manage them responsibly, so being very conscious of their ESG, it does fundamentally impact the financial performance of the company. And I think we have known that for a while, but there's more data, there are more kind of news headlines that help reinforce that. And I think people start to believe that more fundamentally. So from our perspective, for the companies that are impact or are not impact in our portfolio, I think we still fundamentally really care about building sustainable businesses that can withstand any kinds of shocks because they've got those really solid foundations as part of the business. And again, on why now, I think a lot of people, to the point about people want to do good, I think that's true, but a lot of people don't know how to do it. And so I think the other thing is that there are enough people now talking about this, that they're collaborating, a lot thanks to the initiative that Hannah mentioned. People are willing to share their ideas and be a bit vulnerable and not knowing what to do necessarily, but starting to experiment and realize we're all kind of learning, and it's not going to stop, but it's kind of, it feels like a time where people are willing to start having those conversations and hopefully have the impact show up fairly soon within our portfolios.
Yeah, thank you. Thank you so much for sharing your insights here. Perhaps for a moment, jumping down to a level that particularly GPs in the room might find interesting as well. So quite a few of you, particularly Tom and Nigel, you mentioned that you're also focusing on impact in particular, less so ESG companies. What are the sectors / even individual companies that are particularly interesting there for you at the moment? Nigel, do you want to start with that?
Yeah, sure. So I think, so first of all, just one clarification. I think we view ESG as a prerequisite. So, that it's almost like a building block. You have ESG that it goes across all of our companies. And then impact is maybe an additional screen, which maybe Liz, doesn't look at, but, we would. So, but I think all of us here are bought into good ESG. In terms of specific sectors and themes and thinking around this, I think, look, it'd be unwise of me not to throw out a few of our own portfolio companies that I think are doing great things. I think in the kind of healthcare space, we're really interested in a business like CMR Surgical, which had a big raise yesterday. Providing access to healthcare and affordable surgery. We have businesses like Infarm and Lilium on the kind of sustainability side of things. But I think there's one area which is very thought-provoking at the moment. The businesses I just mentioned, they're all providing a solution, reducing waste, reducing CO2, providing access. One area we're doing a lot of thinking at the moment is around more horizontal businesses, particularly in the tech space, that are providing tools. So one investment we just made is in a company called Neo4j, which is a category creator of graph databases. And that tool and that technology will ultimately be used for a range of things, from doing very, very good things, like helping scientists cure cancer quicker, to doing things that are, potentially impactful, like helping consumers buy more stuff, to doing things like potentially that are negatively impactful, like helping kids buy more add-ons in computer games or something. So I think something that's really interesting to us right now is how, as impact investors, if we find entrepreneurs and founders who are interested in thinking through issues such as ethics, sustainability, impact at those kind of companies, what's the role that we can play as impact investors to help them do that? And then what you'll end up with is not a company that only does good, which is kind of the traditional way of looking at impact in a binary sense, but a company that's going to have huge impact no matter what, where you can maybe help move the needle so that it does slightly more good than it otherwise would have done. So that's an area that I think is really thought-provoking and interesting for us right now.
Tom, perhaps you want to share some insights into this as well?
Yeah, absolutely. So I mean, our main fund, if you like, the one that I spend most of my time, investing from, focuses on a number of areas, and healthcare and finance are two of the largest in there. And and I think, when I look at how our investment thesis has evolved in each of those areas, I mean, healthcare actually, and health and wellness generally, has a clear impact alignment, but actually even just the nature of the businesses that we're backing. I think we're looking sort of further beyond the current horizon, and for businesses that can really make significant positive change to the quality of people's lives in that area. Obviously, you'll hear that from a lot of people, and we've done that digitally, and I think a lot of venture capitalists have done that sort of digitally. I think we've actually seen perhaps a resurgence of investment in hard innovation, if you like. And so Nigel referenced CMR. I mean, the Cambridge Fund, Cambridge Innovation Capital, that incubated that. There's Oxford Sciences Innovation, and indeed other specialists emerging that are sort of supporting that. And that was part of our thesis when we acquired the portfolio of environmental tech companies that we brought in back in December last year. That to invest in these hard innovations of physical technologies, actually we needed a different set of expertise, and a different team to pursue that. And we wanted to bring that in house. So through those activities, we have investments in companies that are putting water resistant nano coatings on electronic components to enable them to be recycled, to reduces waste. They're focused on physical water treatment technologies, so innovative treatments that improve the throughput of wastewater treatment plants, and obviously in the urban environment, as cities grow, but space doesn't. The ability to do that is really important. And these companies all very clearly align with UN Sustainable Development Goals, and some really fundamental ones. But actually, one of the things that I'm really interested in is, say, some of these hard innovations as well, rather than just the digital therapeutics and financial inclusion. Another big thing for us, and so we've backed extensively. But yeah, we really want to sort of to push the envelope and and really help sort of new technologies to come to market, as well as helping applications of existing technology move the needle.
Yeah, fantastic. Thank you so much. Jumping to a point where we're getting slightly more abstract, looking ahead. What is currently happening in the public markets is concerning insofar as there's a lot of talk about ESG and impact, but more so ESG. There's ESG rating agencies. There's a push to institutionalize ESG into very specific, quite easy to capture ratings that are usually numbers / letters. And that comes with what a group at MIT calls aggregate confusion. In fact, you can kind of spin, as you were explaining earlier, right, with Exxon, you can kind of spin an ESG story for companies where you would immediately be a bit shocked about how they could rate highly on ESG. That is often called greenwashing, particularly when you're looking at the environmental impact or non-impact of these companies. Other people call it whitewashing. There's various different color codes depending on the area you're looking at. So as I understand it, in VC, we are not yet there. There's no institutionalization happening. There's no standard that is used by people like there is in buyout, even, and definitely for public markets. How are we going to prevent that greenwashing from happening as much as possible? And perhaps we can talk about what you're doing concretely at the moment on your fund level, on how you make investments, how you help your portfolio companies in a day-to-day business at the moment, talking about this. So perhaps Liz, you're quite involved, particularly looking at an early stage, and then we can jump briefly to Nigel, who is coming in much later. Perhaps might be an interesting piece of information.
Yeah, no, I feel pretty strongly about how to work with us at the early stage. So I think, fundamentally, I believe that the founders that we back at Kindred really do want to do good. And I think a lot of this kind of greenwashing isn't something they don't set out to kind of trick people or, get efficiency somewhere while pretending they're doing something else. I think they really do want to do good. And a lot of the greenwashing is kind of a result of their environment. So I do think there are things we can do as kind of early stage partners to our companies to help them make their businesses kind of more robust as they go through those levels of scale, speed, pressure, and all of those kind of external factors that come in. So I think as early stage investors, it's really important to be having conversations around, what it looks like to scale, and that we don't necessarily expect scale at all costs. So helping our founders think about the trade-offs between, speed and quality, or cost and sustainability, and make conscious decisions around how they're making those decisions internally about how they build their business from the early days. I think that the kind of signal and the tone from the investors can make a big difference to those founders. And then I think as a kind of next step, we tend to do follow-on investments, but we don't really lead. And what we do is try and help people that are the right partners for our founders as well, which I think often isn't necessarily intuitive. It's not always about the big brand and the big label of the investor, but I think it's really important to help our founders figure out how to identify the best partners for them who are aligned in the type of business they want to run, again, so they don't, succumb to kind of bigger pressures as they grow. So I think there are those things. A couple more are kind of learning how to set culture and values internally. That's something we try and help our companies do early. It may sound a bit fluffy to people, but I think it makes a huge difference how you interview for your first few people, how you assess values, and then how you define those within your company, and then how they adjust as your business grows. And so if, again, you're making those decisions quite consciously about the type of business you want to build, it can make a big difference to kind of withstand the pressures of growth. And then I guess the other thing we do really is try to tie a lot of the kind of positive ESG actions we do just as part of doing good business. So we try to not put it in a separate bucket that says this is an ESG action, but really think about, you want to build a sustainable team with the best talent and manage your reputation and not have to deal with any kind of, risks later on. And so tying a lot of these types of conversations, I think, to just doing good business means it's a little bit harder to do the kind of greenwashing piece, because you're not doing it for the sake of the green benefit. You're just doing it because it's good business. So I think those are some of the things we're doing in terms of kind of formal accountability. The only thing we collect as an early stage investor is the diversity of the team. So team, management, and board. That's all we ask for at this point, because really we want to help our companies get access to information to help them run more sustainably versus being metrics driven at this point. But I appreciate that looks quite different as you get further down the line.
Yeah, that might already look different for Nigel.
Yeah, look, I think that the concept of greenwashing is an interesting one, because the question I always ask is kind of, who are you greenwashing to and why do they care, right? So for me, I kind of think about it in two ways. As a fund who's investing in this business, saying that we're doing these things, I think the first is kind of holding yourself accountable, both from an intellectually honesty perspective, but also a kind of process perspective for your LPs and other stakeholders who you've committed to do certain things to. So for those, we have integrated into our investment process, an impact scorecard and an impact framework, which forms a formal part of any investment discussion that we do. We also have an ESG DD and an ESG action plan, which, depending on the stage of the company, we implement to various extents, right? So if we're investing in a Series B company and they have 40 people, you're not going to say, oh, here's a bunch of paperwork, fill it out and do this tomorrow. If you're investing in a later stage company with a bit more resources, they might have a bit more, bandwidth to do more things sooner. But I think the more important stakeholders, and I've noticed this over the past couple of years, is traditionally as VCs, when we pitch to entrepreneurs, they ask about how you're going to add value. And that's usually been, how are you going to help me expand to the US? How are you going to help me get your Fortune 100 customers? How are you going to help me improve my ARR? I think there was a period about 2 years ago, and it's still going on today, where we were explaining the sustainability story to our entrepreneurs when we were pitching them and encouraging them to say, this is really value add. Increasingly now, we are being grilled, right, by our entrepreneurs about why we are credible in that area. So, from a greenwashing and credibility perspective, if we are not credible in our thinking and honesty, to this, mandate, which we've claimed we have, then we can no longer treat that as a differentiator to go and win deals. And right now it's a differentiator. We're getting into deals that we otherwise wouldn't. So for me personally, being credible with that entrepreneur or CEO that you're speaking to is the most important protection against greenwashing today.
Great, fantastic. Perhaps the last question, also being conscious of the time, everyone who has any questions from the audience, do let us know. I can see them and we'll feed them in. But where are we right now with the VC industry? So I said earlier, from my external observation, it's all quite early stages. As I said, there's no standards, there's no agreed upon framework. There are several different groups, among them the venture ESG group that Hannah started in particular. And what are the key challenges going forward that the industry is facing, and possibly also how can we overcome them? Tom, perhaps do you want to give a view on this, also thinking about your background as a GP in a fund that has an existing portfolio, and suddenly, quote unquote, you start to think about ESG. What particular challenge does that bring with it?
Yeah, happily. So I mean, you mentioned challenges there, Johannes, and in some ways, it's challenging, but also it's not, right? I mean, so impact. If we lay aside the impact question, talking about a high bar in terms of ESG standards, and this speaks to the greenwashing question as well. So a lot of the companies that we deal with, they're early stage businesses. I mean, across our portfolio, we have a mix of stages, of course, but most of the companies we deal with are early stage, and they're not trying to pretend to be something that they're not, and they don't need to try to pretend. They can be singularly focused businesses because because they're compact. They have that that ability and that clear identity. So in many ways they don't need to greenwash, as it were. They can be authentically good at these things, and so can we. I mean, we're a 25-person firm, and we have a variety of activities, but we can decide that a high bar in terms of ESG standards are important to us. Now, there are some practical implications in terms of well, if we break that down, the sort of three areas that I look at, there's sort of the ESG standards that we set sort of within our business. There's the ESG standards that we implement in our decision making about investments, and then there's the ESG standards that we try to implement into portfolio company practices. The first two of those, should be relatively easy, right? We should, we come to a position and we can decide to do it, and we can turn on a sixpence, so to speak. With respect to the portfolio, as I said, we have these 90 odd companies, and it's interesting. So there is a varying degree of knowledge, interest, sophistication sort of across the portfolio, in these ESG issues. Some of the companies that we're invested in, they are actively contributing to solutions in and around impact themes. But some of them actually haven't considered, to a great extent, what it means to have good governance in place. They don't have diversity policies in place. They don't have net zero policies in place, and we can give them that kind of toolkit. But as always, sort of working backwards and changing people's behaviour, you wrestle with some kind of inertia, right? It is far easier for us to say from now on, any investment we make will require companies to give us a commitment to either adopt or to be on a path to adopting policies. But reversing in for a large portfolio, and the more mature that portfolio is, and the more sort of set in its ways, that's probably where the operational challenge will crop up. But the beauty of many of our businesses is that actually in headcount terms we're small. In decision making terms, we can be relatively quick. And part of me thinks this is just this is about strategy, then commitment, and then just executing through.
Anna, from your perspective as somebody who's dealing with 100+ funds internationally who are committed / interested in this topic over the last 8 months, where has this all started, and where are we at now, and what's coming?
So I think there's so much excitement around ESG and venture, if you can call it excitement. The group has grown from, I think, 20 funds in December to about 140 today. But I think there's, as people have alluded to, there's a lot of noise in the space and a lot of chatter. But I think there's generally not a lot of understanding around what ESG and venture really means. Tom, you mentioned that it's easy to implement things, but I think, starting from kind of what issues really matter for venture. And I think those aren't just the same issues that are being captured in ESG frameworks that are being used in public markets and late stage private markets. So I think that takes a bit more nuance and understanding around what issues matter for early stage companies and venture. Kind of on that basis, there are no set guidelines or frameworks for VCs to use, and it's very hard at the moment. I'm sure we'll get there soon, but very hard to point to best practice, either on a VC fund side or a company side. So I think if you're a VC fund starting out and looking to implement ESG practices into your DD or portfolio management processes, there's a bit of a battle in terms of building in-house capacity and knowledge. So I think collectively as a community, that's hopefully what we can help each other with. But I think the second point is, going back to greenwashing, maybe it's not just the greenwashing on the company side, but also on the VC fund side. If Nigel, as you said, if VC funds are using it as a differentiator, both on fundraising for them and on deal flow, then they need to be able to demonstrate and that they're doing it and be held accountable. But given there's very little consensus in the VC industry around what issues are important, what the KPIs and metrics should be, and any reporting mechanisms, we're still not there. So that's lacking. So I think, I think we have a lot of work to do still, but there's definitely a lot of interest in the space, which is positive.
And who's going to be the decisive factor here? Is there going to be more regulation of the sort of European Commission SFDR frameworks coming down onto the industry? Or is there going to be the biggest push from the community of, say, GPs that you're involved in? Or is it actually the LPs or the asset managers who are under pressure from the public because they're managing their pensions?
So of course there'll be regulatory pressure. I think the SFDR, the feeling is that it's not quite applicable to venture, or the things that they're asking for in terms of disclosures aren't really relevant for venture. So we'll see how that pans out. But at the moment, it looks like the pressure is really coming from the GPs. The four of us on this call, we're all actively having a say in what this means for the industry. And I think communities like ours, and then the Beringia initiative, I think there's a lot of movement. UNPRI are looking to build out a late stage VC framework. So alongside that, and then initiatives from the likes of BBCA, MVCA, I think it will be a community driven pressure as opposed to regulatory or LP.
Perhaps we can close the session off, given that we haven't had any questions from the audience. They're very much welcome, by the way, everyone, to pose any. With everyone sharing a sentence or so of what your next steps in this direction are and what the kind of next challenge that you're taking on and going to solve on your ESG impact tech for good journey, whatever is applicable. Perhaps, shall we do Tom, Nigel, Liz?
Yeah, so I think Hannah alluded to one there. So standardization of reporting is an issue that sort of looms over this, and obviously behind that is this concept of figuring out what matters. So when I say that it's easy to adopt, it's easy for us to iterate, right, and say we could take a decision, but whether it's whether it is the right decision, the last decision that we take, less likely to be. So getting standard data around this and an accepted reporting format where we can all collaborate, that's really key, because it will make life a lot easier for portfolio companies then. So really important topic.
Great, yeah. Nigel, a couple of sentences before we'll end with Liz.
Yeah, mine should be a summary of the point I made earlier. I think what's exciting for us now is, look, our bread and butter is allocating to impactful solutions. I think, there's lots of things we need to figure out, but we feel comfortable that is kind of our core business. I think we're really excited about pushing the boundaries a little bit now, and seeing how we can help affect positive change in businesses that are maybe slightly more horizontal tools rather than just solutions. Because we think that's a huge opportunity in terms of creating absolute impact that nobody's doing really well yet.
I think for us, it's we've spent a bit of time building out what our kind of support for our portfolio looks like. And so the next step is really to engage with the companies kind of on a deeper level about what they feel like they need and they want, and what's actually worked really well, so that we can kind of activate a lot of those conversations that help sharing across companies to try and create some more of those best practice learnings and sharings. And then we can help operationalize that for the rest of the portfolio and help it all scale.
Yeah, perfect. Thanks everyone for the input today and for having a fantastic conversation. We'll be continuing to watch this space. Next session in a couple of months, hopefully. But thank you for having us, Abby. Handing over to you.